Sara Vakhshouri, founder and president of consulting firm SVB Energy International. Sara, thanks so much for joining us. So we'll get to OPEC in just a moment, but I do want to start with the release of SPR from the U.S., this planned one coming today. We certainly are seeing oil prices fall today, but how much relief do you see this actually having on a very tight oil and gas market?
As you said, and your other guests during the program, this is not going to be a complete substitute for Russian barrels that have been missing from the market, but it's going to have impact on the market sentiments and that war premium that has been priced in the prices and increase the prices. Being very close to OPEC meeting, it's going to have that compounded impact to bring the prices down, obviously, after the OPEC meeting today.
Well, one of the arguments that I have seen, and this comes courtesy of Jim Bianco, it's not my own work. I should tilt my hat to those much smarter than me. So if 180 million barrels is what gets removed from the coffers of these strategic reserve releases, does that mean that at some point the White House is going to have to refill them? And because they're going to refill them, that means that there's a buyer in the market for 180 million barrels. Therefore, I mean, prices just remain as tight as they were.
Many of these, as you said, it's like a movement in a pool of liquid that if you're pushing the water from one side, it goes, there's that gap from the other side. So it's not really a quick fix to the market. As I said, it's going to have a psychological impact on the market, but at some point it should be filled. Well, it buys us some time as we are getting to the warm weather, the prospects of some mediation between Ukraine and Russia. So it's kind of buying time, few more weeks or days. But as you said, yes, at some point it should be fill that gap. Otherwise, it's going to be losing that strategic petroleum reserves creates that vulnerability in the market and for the United States. So yes, most of this it's using from one pocket, bringing it to the other pocket, playing all these games that we can in the market to bring some relief temporarily for the market in a short time.
Well, of course, the other potential coming dynamic that this market needs to deal with is in India that might be buying Russian oil at a $35 per barrel discount. How would that change things, Sara?
That's a very good point that you bring out. Both India and China, obviously major consumers and importers of energy at these prices that are very high. They cannot resist the import of Russian oil. And yes, that is going to increase their export flow, Russian export flow to these two countries and other countries that are interested in discounts. But obviously volumes of imports with discount to China and India would be much larger. And we're going to see that most of this oil being traded in domestic Russian currency, ruble, and also using the Russian messaging system. So it's going to actually work.
Well, and of course, Russia also appears to have backed down from their demands for receiving payment in ruble. Is this something that could also sort of ease pressure as Europe looks like it can still continue to supply themselves with energy coming from Russia?
So the thing is that it's kind of, I wouldn't say connected, because if Russia decides to accept the ruble as part of the currency, is actually a mitigation for U.S. sanctions and global sanctions on its financial system. So it's somehow, we could argue, that make it easier for the customers to purchase Russian oil because it's traded in a currency other than U.S. dollar, in a system that is not using SWIFT. But again, going back to Europe, there's no quick fix for European energy supplies. Most of the countries that they have announced that they are going to reduce their oil and gas purchases from Russia, they all said by end of 2022. So none of them could start that immediately. There is going to take, obviously, months to adjust that currency, to find those ways using its own flows, maybe not by the end of March exactly as it was mandated by Russian government, but it's something that it could possibly happen by the end of the year.
And Sara, as if that dynamic wasn't complicated enough for you, we also have to wrap our heads around OPEC and their meeting today. Last meeting, just 13 minutes long. What are you expecting from the cartel?
Another easy meeting because all the indicators shows that OPEC tries to keep and maintain its integrity. They're going to stick to their plan and increase what they were planning. It doesn't seem that there's going to be much of conflict in terms of just increasing the production as much as they agree. Beyond that, obviously, we don't think that they're going to increase oil further than that because it's kind of a stab in their own back. They're not going to increase oil to show a green light to the market that if there is going to be a substitute for Russian oil in a larger volume, they see this as a no supply interruption because it was mostly a volunteer cease of import of Russian oil. So we think that it's going to be a very easy and just very straightforward meeting today.
But can it continue to be an easy call from OPEC to not increase output? If oil continues to remain above $100 a barrel, is there some point where they're going to have to cave to this political pressure?
Something that is important to note is that OPEC usually looks at the balance of fundamentals more than the prices. Obviously, higher prices shows that the fundamentals are in balance, but they look at how much barrels have been going out of the market and how much they're going to they should release. What they indicated is that the demand is going to grow to pre-pandemic about 4.2 million barrels per day additional this year, slightly higher than pre-pandemic. And what they see is that according to what schedule that they had, they're going to somehow fulfill the market needs. They're maybe doing some small tweaks by changing the baseline of the countries, contributing countries, but not at a larger scale. They would, as I said, if they increase their production further to completely or to not completely possible really, but to partially substitute Russian oil, then they're giving that indication to the market that other importers would easily stop importing Russian oil. They are not going to do that. They're going to stay away from politics as much as they can resist it.
All right, Sara, thank you so much. Really great setup to look forward to this OPEC Plus meeting today. That's Sara